Hey, everybody, we're back with another episode of Real Estate Investing Secrets. Today, I'm here with a veteran who's been through every single market you can think of, and he's going to share with us the secrets to staying successful no matter what's going on around you.
Welcome to Real Estate Investing Secrets. We're all looking for freedom and the opportunity to live better, more fulfilling lives. But most of us were trained our entire lives to work for someone else and chase their dreams. How can we use real estate investing as a vehicle to achieve financial freedom? My life is dedicated to answering your real estate investing questions and helping you build an investing business that allows you to change your life and the world around you, and to enable you to turn your dreams of financial freedom into a reality. My name is Mike Hambright from Flipnerd.com, and your questions get answered here on the Real Estate Investing Secrets Show.
Hey, Tim, how you doing, buddy?
Man, I'm great. Dylan, how are you today?
Man, if I was any better, I'd be you.
Oh, that's my line.
Listen, I got to tell everybody. So I only met Tim about 6 months ago, but he's a good friend of my good friend, Mike Hambright's. And when I first met Tim, he's a huge personality. He talks a lot, and so do I. So it's a big problem when we're in a room together because we're fighting over the microphone, right? But one thing that I learned early was Tim has been through a lot of different markets, and he's seen almost everything that's going to happen to most single family investors like us. So I'm super excited to dig in to see what you think is happening, Tim. But first and foremost, I want to say that Tim is a vet. So he's a Marine, and we appreciate everything that you guys do for us and every sacrifice you guys have made.
It's my pleasure.
So give us a little backstory, Tim. How'd you get started in real estate investing?
I tripped into it when I got out of the Marine Corps. I was just looking for a job, and I put my resume on a website that was militaryhire.com. And from there, I got a job as a project manager for a fellow that was owner financing houses in DFW and was looking for someone to kind of lead his crews. And, it's like my grandmother would say, I kind of cut my teeth on the business whenever I was a kid. My grandfather and my parents were both realtors. So it was a natural fit, and just, I tell my kids and I tell new investors all the time, it's hard to come in at the top. So you got to be willing to work from the bottom. And so, I started out as a project manager, then I became an acquisitions guy, then I became a sales guy, then I became a franchisee, then I became a partner, then I started hosting events, then I started lending money, then I retired and ate a lot of barbecue, and now I'm lending money again.
Gotcha. So you've basically been a contractor, a real estate investor, a buyer for other real estate investors. You've hosted big RIA events and nationwide events, spoken on a ton of different stages, eaten a lot of barbecue, and now you're doing what you love to do, right? Because this is kind of like the second stage of your career, and it's helping other investors get their deals done primarily.
Yeah. This industry, you always hear the cliche, your network is your net worth. And this is an industry that I've never seen a cliche that rings so true. I had a lot of great people that poured into me when I was young, and they took my hard work and my ethics, my morals, the Marine Corps always talks about honor, courage, commitment, right? I did right by them and they did right by me. And it really has been a 20 plus year rising tide that lifted my boat. And like you said, Dylan, and I'm glad you noticed that. I really do try to pour into others and help them make their business better.
Yeah, in the end, and I ask this every single time when I've got a guest on and we do a show, how important is your network? And I know, like, I've searched through some old YouTube stuff because I always do some recon on my guests. And I was watching Hambright at some event you were running, some RIA, like 8 years ago, and we all looked younger and skinnier. And I don't even know if you had a beard at that event, but it was really grainy and like you couldn't even see it. But it's funny because when I heard you speaking up there, when you gave the beginning of what was going on at the event, and then I heard Mike talking about the market, most of the principles haven't changed, but what I saw there was when I first met you, like I said, Mike said, man, I've known Tim a long time. He's done a lot of great stuff, and like he's a wealth of knowledge. This is going back again. I don't know if it was 8 or 10 years. It was a while ago, not a long time ago, but in real estate investing world, that's a long time ago. So we've been doing this stuff for a long time, right? And that network, look at what you and Mike have grown together. And I know that, you're a big part of Investor Fuel, and you've helped a lot of those investors out. getting their deals done, and you're still doing deals yourself, of course, too. But why don't you rewind it all the way back? And I forgot to tell everybody, you're in the DFW market. You mentioned that, but why don't you tell us about your first solo investment deal?
I am not sure I've ever done a deal where I was the only principal, because I came from nothing and had to have some partnerships and some joint ventures along the way. And I guess my partnerships all broke up. Sounds awful. I stopped mainly partnering with other people once I got married, and because my wife was in the business too. It's actually how we met. So it was kind of one of those, I had a partnership with a very large hard money owner finance guy in DFW, Scott Horn. And we had 63, I think the number was, owner finance properties. This was, God, 05, so 17 years ago. I know there's probably people listening that aren't even 17 years old. And I started dating Jennifer. Here's a funny story, Dylan. So she called the title company. She had just bought a home investors franchise. She called the title company and said, I want to wholesale this house, but I've never wholesaled before. Who should I call? And Kitty Cloud, the title agent, said, call Tim Herriage. And so she calls me, and we go out and I meet with her, and she assigns the house to me, and I turn around and assign it to another investor, and I made more money than she did. So the joke is we got married to keep it all in the family. But I mean, really and truly, I mean, from there we joined forces, and I put the other partnership on hold. So I've actually never been asked that question. I've never contemplated. I mean, there's been plenty of deals that I signed on that she didn't do anything on because she's not that active in the business anymore. But I got to give her and Scott and all those other people all the credit, because the first 6 to 8 years I always had a partner.
Yeah, it goes back to your network, really. And there's a guy I do a lot of business with, and we partner on almost everything. Not from my side, but more from his side, because he's kind of retired, he's kind of comfortable, he's kind of lazy, but we trust each other 100%. And again, those deals would have never come my way had I not been in those rooms like you guys are. And we're still in a lot of those rooms today. Locally, I'm still at a lot of different meetups, even after the annoying pandemic. And I mean, I've flown down to Dallas before to go to TJ's meetup, right, with the Sicilian brothers. And I mean, that's a long ride just to go to a meetup. But I know that the people I'm going to meet in those rooms, even if it is online, but I love being belly to belly, because that's where those real relationships come from. But I mean, you can basically attribute your whole real estate investing career to networking, right, and to marriage, of course, which is the ultimate networking.
Well, yeah, I mean, if you ever read the book Millionaire Real Estate Investor by Gary Keller, right, it talks about the ladder of success. And when I got out of the Marine Corps, I had a gunnery sergeant that gave me Rich Dad Poor Dad, and Millionaire Real Estate Investor was one of the second or fourth books that I ever read in this business. And that part just made a lot of sense to me. It was like, oh God, that's genius. I mean, and also some of that's the military. And we'll talk about improvising, adapting, and overcoming. But in the military, part of the chain of command is not questioning the seniority of the people in front of you, and learning. The first thing you learn is you go to your school. So I was in intelligence, and they taught us intelligence analysis. And the first thing they tell you when you get to your first unit is forget everything you know, right? Because you know it from a book, you don't know it from practical application. And at that point, the NCOs, the staff NCOs, the officers, they start molding you and shaping you into what you need to be, not what a book says. And I don't know, I guess I just took that with me into professional life. And I mean, if I had someone that had already been where I wanted to be or wanted to get to, it only made perfect sense to follow them. And, here we are 20 something years later, billions of dollars of transactions later, and I still do the same thing. I find someone that is where I want to be, and I just latch on and I add value to them, and they typically add value back to me.
Yeah, I think a lot of my friends were in the military right after high school, and I think guys or girls who were in the military, or if they were really good at sports, and I guess they didn't have to be all stars, but they really had to buy into that to the team idea. and there's a hierarchy, right? And it doesn't matter what your coach says, your coach is right. And I don't know this because I never served, but I know that if your senior, officer or whatever tells you to do something right or wrong, you're probably going to do it. Right. Yeah. So I think you guys have an unfair advantage in business because you understand systems and you understand things that civilians or people who weren't in that team atmosphere understand. And in real estate investing, you don't have to. We all know lone wolves, and that's cool. There's guys who are like that, mostly dudes, right? Because they got just way too much bravado and testosterone. But man, oh man, I tell you what, when you can work together with somebody and all those like Lego pieces fit together and everything's just smooth and it closes, you're like, why aren't we doing more of this stuff? So again, back to networking, back to building a team, being part of a team, even if it's a figurative team. Because I look at everybody like partners. I look at you're my podcast partner right now, because if we don't work well together, then neither of us are going to get anything out of this. So, you talked about what's going on today for you guys and how you're helping investors. So tell me, show us, paint a picture for us on your business, what you're doing right now.
Yeah. So at Rcn Capital, that's kind of my day job, if you will. I'm the executive director. Think of me like an ambassador for the company. I host the Uncontested Investing podcast for us. I had Mike on there last week. I go to Investor Fuel Mastermind and I go where the customers are and I talk to them and I understand what their challenges are and what their needs are and where my products can help or what products I need to develop. And I go back to the CFO and the chief marketing officer and the CEO. And I say, hey, we need to do this. Can we do this? How about this? And I really, the customer is always right, except when they're wrong. And it's our job to, lending is super simple, Dylan. It has 3 pillars. Number 1, as a lender, I must make a loan in order to make money. Right? Pretty simple. That's how I make money. If you're an investor out there, you must have a piece of property to invest in order to make money. It's just the way it works. We have to make profitable loans, right? If the federal interest rate, the Fed funds rate is 8%, which it's not right now, but I'm just giving an example, and I loan the money out at 6%, well, that's not a good business model, right?
You're going to have a lot of origination points.
Well, but yeah. And then the third pillar is we have to feel like the loan's going to be repaid, right? So as long as we make a loan that's profitable, that gets repaid, we make money. And it's really just that simple. And so my job is to show the path forward for the company to make more money, make more loans. And then to sit with the customers. And that's what I love about Investor Fuel, because when you can sit kind of for a day or two with some, 10 to 20 year transaction folks, they have one set of needs. And then you can sit a day or two with some 80 to 100 a year transaction folks. They have a different set of needs. And oftentimes I can give them tips to make them a better borrower, or they can give me tips to make me a better lender. And I think, I don't even know if they know it, but they're a part of my team, because I value what they say, and I'm a very active listener. That's why I comment so much in these masterminds. I'm there to learn. I'm there.
He is the top commenter, folks. Let me tell you.
When I can get the mic from you. But it's like, I'm there to listen and learn. And when I hear someone talk about what they have a problem with another lender, it's an opportunity. Right? It's an opportunity for me to make my company better, to not repeat that problem. And when I hear someone say something that is going to make them less bankable, we'll call it, it's my job to help them understand how to be more bankable. So I think, at Rcn, our ethos is to give freely without being salesy. And the more I can make someone's business better, the more likely it is they'll call me when they have an opportunity.
Yeah, the best. So I want to dig into RCN more, but the best mortgage guys that I know, again, I'm from pre-foreclosure, during foreclosure, long after foreclosure days, were the mortgage guys who were like, listen, Dylan, if I can't get this done, I'm going to find someone who can get it done. And in my early 30s, I was pretty wise, believe it or not. I don't know if I've gotten less wise, but I would look at that and say, now these are the guys who are going to survive, because again, they're a lending partner. So if they had to find a hard money lender, maybe a private lender, just to connect those people together to get that deal done, they would do that. And again, I think the way what you're talking about is being a team member and looking at us and you together and making your business better, making you better, making the company better. It's a huge testament to the way that you look at business.
Well, as a point to that real quick.
Yeah.
Yesterday, Kevin Lee, one of your members, texted me and said, Tim, do you know someone that could close a loan fast in Nevada? And we're not currently licensed in Nevada. I said, absolutely. Send me your email address. He sends me his email address. I email him and this guy named Matt, that is one of our correspondent lenders. He actually loans some of our money, and I connect them. I don't make any money. I don't make any fees. But the fact that he'll get Kevin's loan done means that I'm always the first person. Not always. It's more likely Kevin will call me when he needs something
and refer you out too.
Right.
And to me, those warm referrals, that's what it's all about. And I think as you graduate in business, I don't care if you're in the real estate business or if you're selling widgets. Once you start building that, and those of us, again, I can see a little bit of gray in the beard. Like we're over 21, right? We've been in this business a little while. We know
over 21 years in this business.
Yeah. Unfortunately, I'm almost there, also, but I think we know how important that is. And to have guys like Kevin Lee, who has become, one of my good buddies because of networking, and we can joke online almost every day. I see his stuff, I'm making comments, but if I need something and he has it, he's going to send it my way, vice versa. It's it's just a strong circle, of friends who actually make money together. So that is, that's a real life right now case study as to what we're talking about. But Tim, let's dig into RCN a little bit for the newer investors, or even somebody like me. I don't totally understand what RCN does. So it's not like a corner bank, and it's not like you're a mortgage dude. So like, how does RCN work, and how does it help us as investors?
Yeah. So we're trying to avoid the word hard money lender, or the phrase hard money lender these days, because there are some negative connotations to it. But in essence, we're a private lender. We operate in 46 states, and we provide fix and flip, long-term rental, and ground-up construction loans to real estate investors for single-family, multifamily, and mixed-use properties. That's the elevator pitch. In essence, we're a direct lender, so we loan our own money out, and so our decisions are made based off of a couple criteria. So one is experience. We will give a first-time investor a loan, but we're going to make sure that the LTV is a little bit lower and the loan to cost is a little bit lower. So basically, that we want them to have more skin in the game. We need to, until we get a track record. And I think it's important for any listener of any skill set to understand that a track record is sometimes more valuable than a bank account, because remember the three pillars, right? The last one is I have to feel like I'm going to be repaid. And if I can look on CoreLogic and see that you've owned 100 houses in the last 5 years and you have no foreclosures, it makes me feel like I'm going to get repaid. The second is credit score. So your credit score, even though our loans are only to businesses, they're for business purpose loans. So even though it's on a residential asset, it's a commercial loan because we loan to your business. But we look at your personal credit score because, again, we just want to feel like we're going to be repaid. So we're going to look, and if you're on this call and if you're on this podcast and you're listening and you have less than a 680 FICO score, you've got to get with a credit repair company and be proactive about that. Because in the lending world, specifically in times right now where the capital markets are getting a little sideways on us, the difference between a 680 FICO score and a 720 FICO score, although it's only 40 points out of 900, is massive. It's the Grand Canyon. It's the difference between qualifying and disqualifying. I had someone with a 679, and I'm telling you, 1 point lowered his loan to cost 10%. It's a number. We have to pick a number. We have to be consistent. Now, good for him. He already got some credit repair going, and in 2 months' time, he's already at to 750. And that's how easy it is. You can spend a couple $100 with the right.
It's more like credit boosting sometimes, because some of us, you and I have grown up with this. So we've been doing probably credit repair for people since we were 20, right? For our tenant buyers and everything else. But we're not taught this stuff in school. This is why we talk about this now, right? So we talk about financial freedom because they don't teach us this in 5th grade. So you guys pay attention to what Tim's talking about right now.
Yeah, I mean, you may be a 30-year-old person that when you were 18 or 19, you had a utility account charge off that got sold to 6 or 7. And this was me, by the way, when I got out of the Marine Corps. Never had paid my own bills. It was a bad credit little period. But the point is, there's one letter you can send sometimes and get these things wiped off. That one letter will boost your score 20 points. It's just amazing. My wife was talking yesterday. We're very focused on her credit score because we put all the risky stuff in my name and all the investment grade stuff in her name. And, we had an issue the other day where she had bought some furniture at Restoration Hardware for an Airbnb property we have. And that extra $8,000 lowered her score 5 points. And if there's probably people listening right now thinking, wow, they watched their score that close. Absolutely. Because when you're dealing in millions and millions and millions of dollars of property and debt, every point on your credit score counts. So I did not come on here to talk about credit repair, but I think as we get into tighter financial markets, which is happening with all the interest rate increases and the liquidity crisis on the bond market, credit score and properly documenting your experience and track record will become paramount.
Yeah. So you talked a little bit about that as things start changing. And again, us old guys, we love to talk about the old days and be careful because it could be coming again. And there's always we know this, there's always a crash coming and there's always a huge bounce coming. It's just, is it in 5 minutes or 5 years or 50 years? Right. But let's start talking a little bit about that. So we can feel a bit of a shift, right? So for investors, Tim, I don't care if you're new and you're listening or watching today, or if you've been in the business 20 years, what is the best advice that you can give to real estate investors right now as we start heading into changing times?
About an hour and a half ago, I got an email from a multi-billionaire mentor of mine. And one of the sentences in the email is, times they are a changing, have to be nimble. And I feel like that sums it up for all levels of experience, exposure, net worth, liquidity, income. Times are changing. And this is not 2008. This is a completely different global political financial setup. It's much more like 1981, 82 than 08, but it has a lot of different components. Now, I mean, both times Russia was at war and inflation was at all-time highs, but we don't have time to talk about all that. I would just say that we've never had this politically motivated of a Fed. For all we know, in their meeting in a week or two, they could say, never mind, we conquered inflation, because this yesterday or earlier this week, the core PCE, which is the main measure that they judge off of, was down month over month and down year over year. And the whole point is, we don't know what's going to happen, but here's what I do know. If you're actively looking at or evaluating houses, you should be offering less today than you were a month ago. If you're actively refinancing or keeping or retaining houses, you should count on paying about twice as much interest as you did this time last year. And you should expect your lenders to begin to look for more liquidity, more money in the bank, or require more down payment. If you were borrowing money at 80% in the last couple months, you're not anymore. And you have to be really careful relationships are going to matter for the next month to a year, and we don't know how long. We've got midterms coming up, and the nation's kind of become political, and who knows, we may avoid a prolonged recession, but we need a prolonged recession. And ultimately, interest rates aren't that high, historically speaking. I remember when borrowing money for rent houses at the bank at 9% was a great deal, right? Hard money was 18% and with 2 points, and we all made a ton of money. So things are changing. The hedge funds are pulling back. Open Doors, Zillow, Orchard, the iBuyers. That's sucking some demand out of the marketplace. Higher interest rates is sucking some demand out of the marketplace. Investor appetite is sucking some demand out of the marketplace. So we're still historically undersupplied, but do you have some knee-jerk reactions for a couple months where sellers start slamming their values through the floor, hoping to be the last to cash in before the bubble bursts? And if you're listening, I'm doing air quotes right now if you can't see this, because I don't feel like we're in a bubble. I look at replacement cost a lot, and you would have to have labor and materials both drop over 20%.
Yeah, 30%. It's wild.
Yeah. I mean, so I feel good about the 12 to 24 month prospects, but look, the Federal Reserve spent all year last year saying they would not overreact. That if inflation was not transitory, they would not overreact. They've overreacted, right? And now they've almost tripled the Fed funds rate. And you got to remember, we were at negative overnight rates last year, negative. And they've said they want to get the Fed funds rate into the threes. And now they've started selling their bonds into the market. And I think that's the biggest danger we have right now, Dylan, is if bonds start not trading. So, if you're listening, I'll give you a 30,000 foot view. Every mortgage that Fannie Mae or Freddie Mac guarantees ends up being all packaged into these big residential mortgage-backed securities and sold into the secondary market. And what caused the crash of 08 was in August of 07, a couple subprime mortgage bonds did not trade, which means it's a $500 million. It's split up into 100 pieces and investors buy them. So that's the only thing that we're worried about right now is there's been a couple bonds that have been hard to fill, which if they're not being filled, you have to raise rates to make them more attractive. Yeah.
Tim, when you say filled, explain really quickly what you mean by filled. So there's an empty bucket that they're trying to fill, right?
Yeah, subscribed, right? So imagine I have $100 and I split it up all into $1 bills. Well, there's a certain piece of those. Well, there's a certain piece of that $100 that's going to be $5 bills. Those are the AAA, the highly rated stuff, right? That everyone wants. There's going to be some $2 bills and some $1 bills. And my job as an issuer is to go out and get enough bond investors, banks, private investors, hedge funds to buy those bonds. And the way you do that is through ratings and through basically interest rates and coupons. And so the AAA part, the part that never loses money, right? That may sell for 2% right now. Whereas the triple B part, that's kind of the riskier pieces, that may sell for 6%. It's super complicated, but the bottom line is liquidity and market risk and hesitation is nearing all-time highs, consumer sentiment in essence. And so it's just something we have to watch. It's a wild card. I don't think we get there, but it is a wild card.
So you talked about buying deeper, and I know that you're not like a sales trainer for real estate investors, but you've been around a long time. You've done a lot of deals. This is something I talk about all the time is learning how to buy lower. And as you've seen, and I've seen the mad rush of new real estate investors come into the market, they're locking properties up, right, at too high of a price, kind of screwing up the market for the guys and girls who've been around a long time. But for some of those intermediate investors who have done a few deals and they're kind of like ready to get to that next level, when you talk about buying lower or buying cheaper, like what do you have any advice for those investors on how to get better prices on housing when the whole world thinks that their houses are still worth way more than we know they are?
Yeah, I mean, I think, you have to be armed with data, with good comps. For instance, there's a house in McKinney, Texas right now that we signed a contract on a month ago. And when we signed the contract on it, the comps were pointing above 375. And today they're pointing at 365. That's the pending listing. And we're trying to verify with the agent, what's it under contract for? Because it could be 350, it could be 375. So I think, when I go all the way back in my career, when I used to be the guy that was bellied up at the table, I would share. I always would just share the comps. Like, no, look, Dylan, Mary Jane said she sold her house for 420, but she took 405. And she paid 2 realtors for that, right? And she paid part of their closing
Right.
costs.
Let's get down to the brass tacks.
Yeah. So I think it's data. It's also it comes down to what you said, sales training. You're going to need to sharpen your axe to where you feel more prepared to have the conversations from a point of authority.
Yeah, I totally agree. I think that in this super hot market, there's 2 things I've talked with my guests about, and one of them is that networking. When I first joined Investor Fuel, as an example, and a lot of the guys who are on the show are Investor Fuel and members, but they would almost laugh at me because I was still doing a lot of meetups and hosting them, around town. And I talked a lot about building your own meetup and building those relationships and building your buyers list up, and not building a buyers list to have 10,000 people on there who aren't buyers. That's useless. But really starting to create relationships, because for me, I get a lot of deals because of relationships. Again, I've been in the biz since 2003, almost as long as you. So I've weathered those storms, and you just see each other and you're like, and there's Tim, there's Dylan, we can do a deal together. There's no question, right? So I've seen in the last year that changing a lot, because some of the bigger companies who are involved in Investor Fuel, the owners, they have like relationship managers now, which you haven't heard about that in years and years and years, because people didn't spend money on Christmas parties during the bad days for like a decade almost, right? So I think, like you said, networking, of course, with lenders is important, but having that relationship, and then moving to the other side, like we just talked about, it's learning how to sell. And learning how to sell isn't, again, the toothpick in the in your teeth and trying to sell somebody a car with a bad transmission like they do up here in Detroit, right? Because that doesn't happen down in Texas. But it's really understanding how to talk to people and communicate. And like you and I today, and I'm not kidding, we could go door knocking, whether it's down by you or up by me. We could put a deal together today by the end of the day, because we'd sit down, we'd find out what these people need. And there'd be other investors who couldn't, get them to a new place or build a handicapped ramp or whatever it was, or find money today to get them, moved on quickly. And I think everyone's been on a one track, which has been to the moon. So now it's time. You're going to have to dig in, roll your sleeves up, and learn how to really do this business. And again, this business is all about people, unless you're a gazillionaire, but then you still need people to manage your money, right? But it's all about people.
And an important thing that we've had a lot of conversations at RCN Capital, because, I mean, look, everybody, and another thing is, I tell the loan officers this every morning, and I'll tell the listener this. Everyone involved in the real estate investor ecosystem is being affected and impacted by the current financial climate. And what you cannot do, and the kiss of death if you're struggling, is stopping advertising and prospecting. Henry Ford once said, a man who stops advertising to save money is like a man who stops a clock to save time, right? It's just, and I tell you, dear listener, I tell you this from experience, because I've been the guy that panicked and tried to stop the bleeding, right? Tried to stop advertising or stop losing money or stop spending money. And there's always opportunity, there's always demand, but there is no opportunity without a lead or a prospect. And I'm not saying that you have to spend the way you were spending, but I highly recommend, if you're in this business and you're worried or you're struggling, number one, get a mentor or a coach or at least a friend that's been there before. And number two, don't shut off your lifeblood unless you're willing to start door knocking, right? Like that is a form of advertising. It costs you money. It costs you time, therefore it costs you money. Like if you're going to stop generating new business, you better have a plan to get new business, if that makes any sense.
Yeah, no, I can't agree more. Like I said, you gotta roll your sleeves up. But the other thing is, and I think I just read Handbright wrote a little story about this. Like you can't stop, because if you have no bullets in your gun and you can't shoot that deer, the family ain't gonna eat. Right. And it's easy for us to say because we've been through it, but I don't care what you have to do. If you can't eat that day, that's okay. But you have to keep getting new people in front of you, right? Because what does happen, and this is, I don't know if it's negative, but it's not super positive, but the people who are newer, the people who haven't weathered these storms, the guys and girls who are going to pull their chips off the table, now they're out of my way. So now when we talk about buying deeper discounts, if I'm the guy, again, like you said, bellying up to that kitchen table, I don't have 8 other people telling the seller they can get 10 or 20 more grand for them because they can't. So now we kind of wash that away, and the strong are going to survive. This market is not going to be like 08, like you said. We're always going to be shifting and changing, but there won't be a hard crash like that because there are too many things that led to that. And the government, I don't blame the government, but they didn't step in super quickly back then in 06, 07, because I saw it happening. I saw the blood. And I mean, we were, shooting fish in a barrel, and that was great back then, but it won't be that way today. But I do think you're going to have to be a better business person all the way around and be well-rounded, from your network to your lender network, to the people that you do business with every single day, and learning and growing all the time. You're at events all the time, learning and growing, and you've been learning for a long time. Same thing as me. So, not that we're the 2 smartest guys in the room, but we're the 2 smartest guys on this podcast right now. That's guaranteed.
Well, and I think the point is you have to be in the room, right? Yeah. The minute you take yourself out of the room, you no longer have the opportunity. You won't know when it starts back. You won't know when things get improved. You won't, and just last week, my acquisitions team had emailed me and said that they were very confident we were getting this other house in Garland, Texas. And we were offering like 150 something. And they told me this morning or yesterday, I can't remember, that we were outbid by $50,000. Right. So we were outbid, more importantly, by 33%. That's insane. And I just told my team, I said, calm down. We're going to lose some deals right now, but we're not going to be stuck with deals. We're not going to have losses, right? And you don't know if that's someone that has their head in the sand and has no way of closing. And if that happens, and this happened to us, and Mike was the king of this, when they come back to you, they have nothing to, if they liked your offer before, they love your offer now.
Right.
And so I had to tell them the other day, I said, look, we just got to be okay to lose. And I'm okay to lose right now. I'm okay to lose a little bit of a couple deals, maybe not convert at the same margins or not margins, ratios. And as long as I know I'm being smart and I am being, not smart, thoughtful and proactive. That's the key. I'm not, your head in the sand and your butt in the air, you're going to get your tail kicked.
I think that's a Texas saying, folks. I haven't heard that one before.
I heard Ron LeGrand say that from the stage.
Just last month. Isn't that funny that we've been, guys like you and I have been listening to LeGrand for 20 some years now, but yeah, it's crazy. But it's absolutely true. You can't have dealitis. It's really hard for new people. And again, if I'm your acquisitions guy and you're like, nope, 20 grand lower, nope, 20 grand lower, nope, 20 grand lower. It's like, because I'm not making any money now. So we have to keep that balance. And it is tough, and that's part of being able to weather these storms. But I think the better the investor, the happier they are that storms do come, because there's nothing, and you talked about this in the bond markets, there's nothing worse than a flat market. And I come from, a flat market. Detroit's way better than it's ever been in the last 50, 60 years, the city itself. However, Michigan's not growing, right? How about Austin, right? How about Dallas? Like, you guys are ridiculous. You're busting at the seams. People are moving in every day. So people like me, I live in that nimble world. So I'm ready for it, and I'm excited, but we want the other listeners and viewers and people who follow what's going on here. We want them to be ready too. We want you guys to be, to be ready to attack at the right time.
A couple things from the military, and I know we're running short on time. In the Marine Corps, we always said improvise, adapt, and overcome. And it's just because when you're going into combat or a combat-like situation, an unknown, you don't really know, you can't plan for everything. So you've got to be nimble. You've got to be willing to, and the other thing we'd say semper gumby, right? Always flexible, right? And I think those two things really are important today. And what you really have to do is don't measure yourself off of social media and what other people are saying they're doing. Have your mission, decide what it is you're trying to accomplish, and just stay focused on that. And I think you'll find that even a crisis like this, my favorite thing is the Chinese symbol for chaos and opportunity are identical. And I think that summarizes the next 3 months better than anything.
Yeah, and I was going to ask you, Tim, what the best advice is over the next 3 months, but I think you just gave it to us. It's semper gumby, and give us your 3 core principles again for the Marine Corps.
Honor, courage, and commitment.
Honor, courage, and commitment. So we're gonna have all the stuff in the show notes below, all the books that we talked about today. But if you guys are not already subscribed, make sure that you subscribe to the show, whether it's on audio through iTunes or Spotify, or if you want to subscribe to the YouTube channel, all the links are below. But more importantly, Tim, I want to know from you, what's the best way for our listeners and watchers to get in touch with you?
I am on every single platform at Tim Herriage. So just at Tim Herriage, you can find me. I even TikTok, Dylan.
Yeah, I can tell. Listen, all of a sudden, all the kids are going to be leaving TikTok, right? Just like they left every other platform, because us old guys are coming on board to try to make some money off that baby.
Yeah, and all of our lending handles are at Rcn_capital. So would love to connect, and we want to be your partner in the life cycle of the business, which means that we're not going to make a loan that we think you're going to lose money on, and if we can't help you, we'll point you in the right direction.
Yeah, and as I said, I'll have links to all of Tim's stuff below in the show notes. And if you're just listening, so it's at Tim Herriage, so it's TimHerriage, right, Tim?
Yep.
And you guys can find him on the Googs. He's all over the place. But Tim, you got any last words for our subscribers?
No, I'll just say this. I believe in the laws of attraction, and this is a scary time if you read headlines. It's an exciting time if you're around people with positive attitudes and big goals and ambitions. So the company you keep, I think, over the next couple months or year will be a big determination on the levels of success and happiness you have in your life. So I'd say just stick with people that are giving good advice, sound advice, and being positive, and we'll see you on the other side of this.
Perfect. I could not have said it any better than myself. So for me, Dylan Tanaka, your favorite real estate investor from Metro Detroit, and from Tim Herriage, we will see you guys on another podcast soon.
Thanks for listening to today's show. There are 3 ways I can help you start or grow your real estate investing business. If you're a new investor and just getting started, the Flipnerd Investor Coaching Program is the most effective program in America. I've been coaching and mentoring new real estate investors for 10 years, and my students have literally purchased thousands and thousands of properties. Many of them started with little to no experience at all. Our program is a paint-by-numbers program where we tell you exactly what to do week by week to make sure that you don't get distracted on your way to results. We show you how to build a real business, not just create another job for yourself. New memberships are limited. You can learn more and apply or schedule a call with me and my team at flipnerd.com/coaching. If you're an experienced investor doing a minimum of 10 deals a year, up to 500 deals a year or more, or have a multi-million-dollar real estate portfolio already, you should check out our powerful investor fuel Real Estate Investor Mastermind. Over 100 of the nation's leading real estate investors are members, and it's not uncommon for our members to 2 to 5x their business just from getting around other members at Investor Fuel. At Investor Fuel, each of us are business advisors to one another's businesses, but we don't stop at business. We focus heavily on becoming better people and living fuller lives. If you're looking for fuel for your business or fuel for your life, please check out investorfuel.com. Applications and interviews are required, as most investors are not a fit for our community. Please learn more at investorfuel.com. If you're not ready for coaching or masterminds but eager to start learning more about investing, please join our private Facebook group by visiting flipnerd.com/Facebook. New members get access to free training from us right here at flipnerd.com, and it's a community to safely ask your questions, a great place to get started. Simply go to flipnerd.com/Facebook to request your access today.